All right, good evening, everybody. Welcome to the third installment of Sharia Investment Webinar, brought to you by Bursa Malaysia I. I'm Benny Lee, and I will be the host for tonight's webinar entitled Making Money Work for You, Preserve and Grow Your Wealth the Sharia Way. But before we start, could you just indicate to us whether you are able to hear us? If you're able to hear us, please click the raise the hand button on your screen so that we know that you're actually able to hear us. Okay, great. Now, first of all, thank you for spending your time this evening to attend our webinar. And we also have a very special guest today from Bursa Malaysia, Puan Nur Suryani Muhammad, who is the Vice President and the Head of Product and Market Development for Bursa Malaysia I, and also Mr. John Ho, who is an investor and a master trainer for Equity Striker. Welcome to the webinar, both of you.
Thank you.
Now, do you know that the Sharia investment portfolios are one of the best performers in Bursa Malaysia, and therefore having a portfolio of Sharia-compliant products or stocks will not only preserve your wealth, but also grow your wealth significantly. Now, in our previous webinars, we talked about what Sharia investment is all about, and in this webinar, we're going to focus on the various asset classes for Sharia-compliant investments. That's where Puan Nur Suryani or Puan Nani, can I just address you there?
Yes, please.
To help us to understand the different asset classes, and most importantly, later on, we're going to also ask John, who's an investor and the master trainer for Equity Striker, to actually help us to understand how to build a portfolio to actually preserve and grow your wealth. So we will begin first by having a good understanding about Sharia investment. So we're going to basically ask opinions from Puan Nani first. Puan Nani, you have been around, promoting Bursa Malaysia I for quite some time. I think you have already made quite significant milestones in getting the brokers and the whole ecosystem itself to be in place, so that those who look for Sharia investment compliant stocks now have a whole full-fledged ecosystem for Sharia investment.
Yeah.
But before that, can you just tell us what are the different asset classes that are Sharia compliant available for Malaysian investors?
There are a few asset classes listed on the exchange. We have Sharia compliant stocks, also called SI stocks. We have Sharia compliant exchange traded funds, or we call it IETFs. Under real estate, we have Sharia compliant real estate investment trust, or IREITs. We also have debt securities of fixed income, and we call it exchange traded bonds and sukuk, or in short ETBS. Yeah?
ETBS.
And we also have Sharia compliant indices. That one is actually for performance benchmarking purposes.
I see.
Right.
So you have the various products now for actually investors to invest in based on the Sharia compliancy. So would you like to explain further about the products that are, where investors can actually buy and sell in Bursa Malaysia itself?
Okay. So far, we have around about 692 stocks or public listed companies, which are Sharia compliant out of 910. So it constitutes about 76% of the total public listed companies listed on the exchange, which are Sharia compliant. We have 4 Sharia indices. If you can see on the screen, we have FBM Emas Sharia Index. We have FBM Hijrah Sharia Index, Small Cap Sharia Index. So that one is actually more on the small cap stocks.
I see.
And we also have Bursa Malaysia Mid Cap Sharia Index. That one is actually basically for medium and also small cap Sharia. Yeah, and we have about 6 out of 10 of the exchange traded funds, or ETFs, which are Sharia compliant.
Okay.
So you can see the list on the screen, and we also have 4 out of 18 REITs, which are Sharia compliant, and also 4 ETBS, also called as retail sukuk.
I see.
So we're going to talk about ETFs and REITs in our coming webinars, but I think today we're going to focus mostly on the equities, or which stocks that are traded in Bursa Malaysia. So Puan Nani, what's actually how is the Sharia compliant investments different as compared to the conventional investments?
Okay, the main difference between Sharia compliant investment and the conventional investment is basically the underlying assets of the investment instruments. Yeah. Okay, so Sharia compliance investment or the products that we are investing in must be free from prohibited elements such as riba or interest. That means any financial services that is based on interest is actually supposedly to be prohibited. And gharar or uncertainty. Yeah. Also misère or gambling. And also other non-permissible activities like non-halal F&B, tobacco-related activities, entertainment that is contradict to Sharia, commercial insurance, as well as share trading in non-Sharia stocks. Yeah? So those are the elements that we need to prohibit from investing in.
I see.
So who sets these criteria, and who actually sets whether this particular investment as a class is Sharia or non-Sharia?
Okay, for Sharia compliant listed on the exchange, securities listed on the exchange, it is being screened or approved by the Sharia Advisory Council of SC, of Securities Commission Malaysia. So it is being screened actually every May and actually November, and also those stocks prior to being listed as initial public offering before the IPO.
I see.
Okay, and they are being screened in terms of they have two assessments. One is actually a qualitative assessment. Okay, and another one is actually quantitative assessment. So the main part will be the quantitative assessment. So under quantitative assessment, they have two benchmarks.
Okay.
One is actually activity-based benchmarks. What does it mean by activity-based benchmarks? This is the nature of the business.
Okay.
What kind of activities they are involved in.
Yep.
Okay, for example, we have, let's say, a company involved in conventional banking.
Okay.
So the profit before tax, okay, and also the revenue must not more than 5% contributed by this activity.
I see. Okay.
So we have another benchmark which is at 20%. Okay. So any activities that contributed by, for example, share trading or stockbroking services that is not involved in actually Sharia compliant stocks. Involved in conventional trading.
Yep.
It must not more the profit and also the revenue must not more than 20%.
Okay.
And there's another one which is actually how the companies manage their financial. Okay, so it involves cash.
Okay.
So how they manage their cash. So deposits in conventional instruments must not more than 33%.
I see.
And another one would be the debt over total assets. This is how they manage their financing.
I see.
So it must not, the financing in conventional instruments, let's say using bonds, for example, and also the conventional financing must not more than 33%.
I see.
So that's how they manage on the quantitative assessment.
I see.
Right. So these are accepted criteria by the Muslim community as a whole, by the leaders or the authorities of the Muslim.
This is actually set by the SAC, Sharia Advisory Council.
I see.
Yeah? So this is actually centralized throughout all the products listed on the exchange.
I see.
Yeah.
Right. Before we go further, we would like to have a poll, basically asking and see whether you actually know what, whether Sharia investment products is only for Muslims or for everyone. So you only have a yes or no answer. I hope that you are able to participate so that we can see your knowledge in Sharia investments. Is that Sharia investment product is only for Muslims? If you say no, then it's open for everyone.
That's right.
Okay, thank you for your participation. We'll come back with the results of the quotes in a short while.
Yeah.
Yeah, Puan Ani is just going to go further into the questions. We know
Okay.
that Sharia investment asset class is important for investors
Mm.
who are looking for Sharia compliant investments,
Mm-mm.
particularly for the Muslims.
Yeah.
But do you think that having this criteria or this asset class deemed as Sharia compliant would be beneficial for the Muslims and also for the non-Muslims as well?
Okay. Um, okay. For me, investing in Sharia compliant stocks or in a compliance manner is not only for Muslim.
Mm.
Yeah, that one for sure. Why I say that? Because it's about ethical. It's about being responsible in your investment.
Mm-hmm.
Ethical and responsible investing also prohibits from certain elements. For example, ethical investment also prohibits the investors from being involved in alcohol,
Mm-hmm.
gambling, in the interest, for example,
Mm-hmm.
and they also adheres to the religious principles.
I see.
Okay, so it actually prohibits the investors from involved in gambling, yeah, in, for example, speculation, yeah, and also it supports the environmental,
Yep.
social, and governance. Or if you know the term ESG.
ESG.
Okay,
Yeah.
so now is the term green. So
Mm.
it's
Green.
also responsible.
I
Yeah.
see.
So
Right.
they support those kind of elements.
I see.
And the Sharia compliant investing is also viewed as a subset of the sustainable and responsible investment.
I see.
Okay, so it's
Okay.
SRI.
Yes.
Okay, if you are familiar with that term.
Yeah.
So it has strong alignment to the social objectives as well.
Mhm.
Yeah. And in terms of profitability, you can see there on the screen that the Sharia, the 5-year returns of FTSE Bursa Malaysia Sharia Index also show that is a good profitability. Yeah,
I see.
around 20%. Okay,
It
and
actually
then
transfers the
yeah,
FBM
and you can see
KLCM.
that the what do you call it? The indices, three Sharia indices have been outperforming the FBMK LCI for the
Yeah.
past 8 years.
Yeah.
So that shows that the performance of the Sharia stocks actually better than the conventional stocks. Yeah.
Yeah.
So Sharia indices have consistently outperformed the conventional counterparts. Thereby, I think the Sharia compliant investment is also attractive. Yeah, for the investors, not only for the Muslims,
Yeah.
but also for the non-Muslims, and also not only domestic, but also for the foreign investors.
Yeah.
Right.
Okay.
Right.
Yeah, it's interesting to say because there's a people, investors especially, have been thinking whether Sharia compliant will take off the list of companies that are not Sharia compliant, whether
Yeah.
they are able to perform.
Mm.
But based on the data that you have shown,
Yeah.
is actually performing better
Yep.
Exactly.
than the normal market itself.
Yes.
And it's quite interesting that you said that it's also about investing in ethical companies because
Mm-mm.
I think that recently we see the news that 15% actually died from consuming alcohol.
Yeah.
We do not want to invest in that kind of companies that actually
Exactly.
cause harm
Yeah.
for other people, right? So I think that's also another interesting view of why you should be looking at Sharia compliancy, especially if you are looking for ethical and moral
Yeah.
investments.
Yeah.
Yeah.
Right. Now, moving from that, we also see that the performances not only based on the index, but we also see performances from mutual funds.
Mm.
And we're looking at Sharia compliant mutual funds that are actually performing much better than some of the best performing more conventional
Conventional
mutual
funds.
funds.
That's right.
Based on the many mutual funds that we have about 148 mutual funds in
Yep.
Malaysia,
Yep.
and only 12 mutual funds actually have double-digit growth in the past 5 years.
Less than 10%.
So that's less than percent, right?
Yeah.
And among that 12 mutual funds, 6 of them are Sharia compliant, and that shows that there is really good performance from the mutual funds itself.
Yeah.
That shows that we can actually invest in, even if we have a Sharia compliant, just Sharia compliant stocks in the portfolio, you can still perform and perform one of the best
Yeah.
in Malaysia itself.
Yeah.
Yeah, so we're going to talk about building a portfolio in a short while because I think that's what we are going to aim for. We're going to have John, who is a value investor, so he's going to basically share with us how easily you can actually find stocks to trade, and especially stocks that are Sharia compliant.
That's right.
So, John, so I'm going to give Panani a rest for a while. I'm going to go back to John, and I'll come back to you in a short
All right.
while.
Yeah.
Okay.
So when we talk about portfolio, right? Can you explain to us what is an investment portfolio? Because I think one of the mindset that most investors or traders have in the market is that to make money, I have to choose the right stocks.
That's right.
Right. And I think that's not the way how you do it.
That's right.
So can you explain to us what is an investment portfolio and why is it important?
Yeah. Thanks for the question, Benny. Actually, if you look at an investment portfolio, you think of it as a collection of assets owned by an individual or an institution. Now, some people, they like to diversify, like as we had the conversation before we started, Nani, Singaporeans, they love properties. I think Malaysians, they love properties too, right? It's easy to understand. It's something tangible, right? So some people, they just like to diversify their investment portfolio. It means they have a basket of different asset classes. They have real estate, they have unit trusts, they have commodities, they have stocks, But since this is a very stock and equities focused webinar, I'd like to elaborate more from a stocks perspective. Now, an investment portfolio that only consists of stocks, right? How they can segregate it, maybe they can segregate it based on different categories of stock. What do I mean by that? So some people, they are less risk averse. Their risk appetite is not so big, right?
Yeah.
So what they do is they buy what the normal industry would term blue chips. The big Maybanks of this world, the big CIMBs of this world. Well, some guys, they said, hey, why don't I have a mix? Like what Benny said, rather than putting all your eggs in just, in your basket, you only have one egg and you just hope for that one egg to grow. Why don't you just have multiple eggs, based on different risk appetites that you have, different categories of stock. And that actually lowers your risk.
So you basically spread out the risk between the different
Yes,
stocks.
that's right. You spread out the risk, and then when you invest as a portfolio, you actually realize that with even making one or two mistakes in the stock selection that you make, you don't lose your entire investment portfolio. Yeah.
Right. So we're going to go deeper into how do you actually select stocks into the portfolio. But before that, if you have any questions, can you just type it down in the chat box over there, so that we are able to compile those questions, whether it's directed to Puan Nani or to John or to everyone. Please do state it in your question, and we will bring up the questions at the last half an hour of this webinar, so that our two guests here can actually explain and answer your questions.
That's right.
Right now, before we go further, we'll take a look at the results of the first poll that we conduct. Can we look at the results? Yeah, so yes is 22%, no is 70%. So I think there's still 22% who think that Sharia investment is only for Muslims. So I think we have already answered the question. Puan Nani has already answered the question that the Sharia investment compliant investment products are not just for Muslims, but they are for everyone, right? So John, getting back to you. So as a new investor who have just started investing now, how do we find stocks to invest?
How do we even start, right?
Yes.
Yeah. Puan Nani, if you don't mind, I just ask a bit about your lifestyle and the products and services that you use. I mean, that you see, a lot of times when you go into investing, a lot of people think, I need to find the next sexy stock. I need to hear some tips, or I need to, something so obscure that it's going to make me a lot of money. But let's start with something very simple, something that's around us. So Puan Nani, do you actually probably prepare Milo at home?
Yeah, I do.
For your
So I
children?
have kids at home,
Yeah,
so
kids,
for the
right?
children, Milo, and for myself, Nescafe.
Nescafe?
Yeah.
Okay. Then when your kids actually go to school and then you don't have time to prepare breakfast for them, right? Or you don't have time to prepare their breaks, do you actually sometimes provide box drinks for them, ready to drink box drinks?
Yeah, sometimes I do buy them chocolate drinks, strawberry drinks.
Oh,
yeah.
cool. All right. And then let's just say in a week or probably in a month, and when you get to work or you go for a business meeting, can you avoid, or would you prefer to use the Lober Raya Damansara Puchong? I mean, that's the only highway that is most convenient to get from Damansara to Puchong, right?
Just now I took LDP to come
to come
here,
right? Yeah, you
have to pay the
missed it
toll.
somewhere.
Yes.
You have to pay the toll. It's almost like by hook or by crook, you have to pay the toll, right? And more importantly, maybe when your car runs out of fuel, what's the most convenient petrol station that you probably use today?
Because nearby home, Petronas.
Petronas.
I use Petronas at home.
All right. So green color, at least once a week that you visit the station, that you have to fill up the tank. And do you shop online? Or you hardly shop online, I guess?
Hardly shop
Hardly shop
online.
online, correct. Then sometimes when you get drowsy or sleepy at work, and then you just want that cup of coffee, or to perk you up, and then there's no gourmet coffee, and then you try to look for something that's a 3-in-1, for ladies, Kacip Fatima, does it, do you sometimes use that product?
I'd rather go for teh tarik.
You rather go for teh tarik. Okay, that's a good point. So you see, if I just asked Puan Nani very simple questions about the products and services she uses, right? These are everyday products, and what in more elaborate terms, venerable products. When I say venerable products, how long have these products been around? I mean, we grew up with them.
Yeah, I remember when I was small, I used to drink Milo.
Yeah.
Yeah.
Yeah, they used to give free Milo in
Free
school.
Milo.
Oh yeah,
Yeah, exactly.
I love it
Free
when
Milo.
when the Milo
Milo
van
van,
comes,
yeah.
right? You'll be queuing up, These are venerable products that have been around for so long. And if a company or a business that has been around for so long, that means something must be right about the business, right?
Yeah.
So rather than look for something very sexy, something that you do not know whether it will work, a product that may fail or a service that may not, these are time-tested, proven products used for generations, And why don't we start with that, So probably you may want to ask the audience, instead of 190, probably the audience, and see what kind of products they use.
Yeah, so I think we're going to have a second poll.
Yeah.
As John suggested, we have a few products that John has mentioned.
Yeah.
So in the poll, we just basically have to answer which products that you normally consume or use every day or every month or every week. So just indicate which products that you use.
Yeah.
Very much. Now let's take a look at the results immediately, right, and see what products that we actually consume.
I'm very curious, actually.
Right, it's quite surprising because these are the products that we actually use and see every day, right?
Yeah.
And you talk about investing in a simpler way. You can actually find these products, which the companies that actually provide these products.
That's right.
So later on, you're going to share with us.
That's right.
But these are consumable products that we normally use every day, no matter whether we are in a good times or in bad times.
Come
They
rain or
are
shine,
still
they say.
being consumed.
Yeah.
So I guess these are the companies that are able to sustain in any market condition.
Especially petrol, unless you're driving a Tesla in Malaysia.
Yeah.
Yeah, I think so. 89% use petrol. I mean, we have to use petrol unless.
I'm curious about the other
Yeah.
11%.
I think even if you use the public transport, they still have to use petrol anyway, right?
Yeah.
So I think Tongkat Ali and Kati Fatima not
Yeah,
much.
No,
yeah.
they are all like me. They love teh tarik
Yeah.
instead.
Okay, so the point is basically looking for this, but now you're gonna also share with us, once I've identified these companies,
Yep.
right? What should I do? How do I know whether these companies are good or not?
Great. So you see, now we've already narrowed down to your circle of products and services, right, around your lifestyle. Now, while they may be good products and services, now you also need to ascertain whether are these businesses running well? Are they something you can invest in? And so if you want to begin, right, now you've looked at the products and you found out the companies that are running them. What is the first criteria that we should be looking at? Any business, what's the criteria that they should be looking at actually? Should it be that they are profitable at least?
Yeah, I think that's the most
profitable.
important
Yeah,
thing.
yeah. I mean, you can run a business, but if you're not profitable, how is it going to sustain itself, right? Then secondly, if they are profitable, and if you're an investor in this company, how will you be able to share the proceeds of the profit actually? how do you as a minority shareholder share the proceeds? It's actually through dividends.
Dividends,
Yes.
yeah.
Yeah, because the profit of the company remains at the company, but
Yes.
the only way you will be enjoy these profits is actually through dividends. And last but not least, if the company is very solvent, they should always have positive operating cash flow. Now, what we mean by this is very simple. You can make profit, but if people owe you so much money and they never pay you, and you never realize this profit in cash, then how long can you sustain, right? So I would like to, I would always like to emphasize that these are the three, at least the three most basic criteria you should be looking at:
Yep.
profitability, continuous of paying dividends, and continuous of having what we call positive operating cash flow.
Yeah.
So you started the product, then you look for data to sustain these three, to ascertain these three criteria. That's where you get your stocks. That's how you select your stocks.
Right. So how do we do it? I think later we're going to show it to
That's
us.
right.
But out of the 900, there are about 939 or so companies listed in Bursa Malaysia. Now, based on John's recommendation, we look for companies that are profitable, not just 1 or 2 years, but for the past 10 years,
That's
long
right.
term.
Yeah.
If they can make profits every single year,
For
right?
10 years.
That will
Not,
be
without
better.
missing any
Yeah.
profits every year.
Yeah.
And they also pay dividends every single year.
That's right.
And they also have a positive cash flow.
That's right.
Right, for the past 10 years. So
That's
these are really good, strong companies that are able to sustain in time, right?
In times, yeah. In
So-
good times and in bad times, actually.
Great. So before you share with us how many companies are there from the 939 companies, let us ask the audience
Yeah,
first
why not?
and see what do they think of the Malaysian stock market, because a lot of people think that the Malaysian stock market does not have enough opportunities. They try to invest in the Hong Kong market, the
In
US,
US
market, but being an investor ourselves, I think there are a lot of
There are
opportunities.
a lot of gems, actually.
So let me
Yeah.
just ask the questions to you and just guess how many companies that are
Meeting these three criteria.
meeting these three criteria that John mentioned.
Yeah.
10 years of continuous profit, 10 years of continuous dividends,
And-
and 10 years of continuous cash flow, positive cash flow.
Positive cash flow.
All right.
That's right.
Oh, you can't hear me now, right? Can already.
Yeah.
In the meantime, if you have any questions, please do keep those questions coming.
That's
Please
right.
do type the questions into the chat box that you see on your screen, and we'll bring these questions up at the end of the webinar. All right. Thank you very much for your participation. We'll come back with the list in a short while, but John is going to give you the answer first. So, John, out of the three criteria, how many stocks are there?
Okay. It's roughly about 30%. So you have got 900. No, sorry. It's not 30%. 30% is just profitability. It's actually 139 companies as we last ran the filter. So 139 companies out of 900 other companies. Now, I just want to reiterate the criteria again. 10 years profitability. So that means if year 1, year 2, year 3 it makes profit, and year 4 it doesn't make profit, it doesn't show on the list.
Right.
Yeah, so it must be continuously 10 years, right? So these are robust, very resilient companies that have withstood the test of time. Even during, can you imagine if you take 10 years, right? Where will it take us? It would take us right to the 2008 global financial crisis, So you'll be surprised during that year, actually certain venerable companies made even more profit.
Yeah.
The joke we have is that, when times are tight, people stay at home and drink Milo rather than going to the mamak stall.
Yeah, true.
Prepare your own Milo. So
And Maggie, right?
and Maggie,
Maggie.
yes, that's right, that's right. So I mean, these are very boring, very it's not high tech. It's but it's something that you use every day that you can't just get it out of your lifestyle, is it?
Yeah.
So this 139 companies, right? What we found was that a majority of them were Sharia compliant, and at the end of this webinar, we will show you how to, on Bursa Marketplace, a very simple way to determine whether the Sharia or not, right?
Yeah.
As Puan Nani mentioned, there were roughly about 600, 700 stocks that are Sharia compliant.
600 plus.
Yeah, 600. Yeah.
Yes.
600.
So we'll show you at the end of this webinar how to just click on a filter, and you will know that these are Sharia compliant. And there's an even simpler way that Benny will review later as well.
Okay.
So once you identify the stock, right, what would your strategy be, right?
All right. So we'll come into that in a short while. Let's take a look at the results of the poll and see whether you got it right and see whether the majority of the person got it right. So we look at 31% says that it's 30 below 100 shares, right? Or some are being quite optimistic between 2 to 100, 400, and 400 to 600. But the majority says 100 and 200. So I think maybe they've attended some of the workshops before and they know the answer. But yeah, it's surprising. We have about 139 counters, right? That meets the criteria. And of course, we have to narrow down further. And John is going to show us how we can narrow down. Now, let's go back to the slides. We're going to take a look at these companies that you have mentioned, the products that we have mentioned earlier, right? And we have actually come up with these few companies here that provides those products. Maybe you want to explain. Oh, so these are Sharia compliant already. Okay. So for example, so you want to mention to us how does this product actually link to these companies?
Okay. So LDP, Leroy, Damansara,
Puchong.
The one that we always pay toll, right?
Yeah. I live in the Sastri Asamas, and to come to office, it's either LDP, toll that I pay, or the curry chilling that I pay. And I just turn on traffic. It's the lesser of two evils that I have to pay.
Yeah.
So this company called Lift Truck, they actually own the concession to LDP, and we'll review more about them, the stock performance later. FNN, we grew up with it. Any teh tarik, any condensed milk, evaporated milk, they're always at the top of the shelf of any grocery store. This company called Power Root, there was, I think a few years ago, there was this craze of Makat Ali and ready to drink milk, ready to drink coffee. Yeah, so Power Root. Now, this particular company on the left, this company called NTPM, I don't know whether some of you have heard of it. If you go to the grocery store and you buy, or supermarket and you buy tissue, this brand of tissue called Premier, I always thought it was an Australian brand.
It sounds English.
Australian,
it sounds masale.
Yeah, it sounds masale. I always thought it would probably be a Kimberly Clark or a Scott Paper kind of company, but it actually stands for Nibong Tebal, Penang, paper milk.
Wow.
Yeah, Sharia compliant. Of course, the venerable Padini. Actually, one that every mall, even in a premier outlet, you can find a Padini mall, right? And of course, no need to mention Nestle. I know there were some controversies about there were videos airing about there's too much sugar, but I was just joking along the side is that if we put less sugar in our Milos today, you think the Malaysians will be accustomed to it?
No, it will not be Milo anymore.
Yeah, it's not a Malaysian Milo anymore, you see. Then Dutch Lady, obviously, and the one that is at the bottom left is pretty interesting, GLEX, So, as prevalency of online shopping comes along, you realize Korea logistic companies have a lot to gain. People want the convenience, people want that, people don't want the hassle of queuing up. People, I know sometimes, if we shop for clothes, we really want to feel them, but if you want to buy a mouse or buy a cup, you don't really need to feel them, right? And my wife started shopping online, Tesco. I was telling Nani, of course we don't buy fresh food, but it's really convenience, and you got to think of the bigger picture. Logistics company have a lot of benefit. They benefit a lot from e-commerce. Yeah. Second last is Petronas.
Yeah.
You can't avoid them, unless 90% of cars in Malaysia goes electric. Then, probably we can do away with them. And last but not least, DG. Who could ever forget the ads? I will follow you. The yellow man.
The yellow man.
Yeah, I'm a DG subscriber, a happy one. We always call them the middle tier. The cheapest tier would be the mobiles, and then the highest tiers would be the Maxis. So they are the just right providers. Yeah.
Yeah, but it's quite interesting, isn't it? Because if let's say you are consuming or you are using DG, and you are a DG shareholder, and when you pay their bills, you're actually paying back yourself. And I think that's interesting because you even can have, let's say, FNN or even if you pay toll and you own lead truck, you are basically paying yourself back again, right? So, I have to use this, right? Okay.
Oh, okay.
Right.
Somehow we ran out of battery, so I guess I have to speak through this.
Okay.
Yeah.
It's gonna be the Michael Jackson today.
Yeah.
Yeah.
Okay.
Yeah. So the companies that we mentioned here. So first of all, we can actually identify these companies right in front of us, right? It's just that sometimes we do not know whether this product is linked to that particular company.
That's right.
And if you, I mean, it's very easy to actually find a company. If, for example, if let's say you love to go to Pavilion, for example, right? And you know there's a lot of crowd there, and you'll never go down. You'll never go. It's not like some other shopping malls where it's going to be empty, but you know it's always full. And don't you want to invest in that kind of company, right? And if I find out that I can actually invest in Pavilion, but not buying Pavilion, but buying the REITs in a Pavilion, then I can have a co-ownership, right? But the question right now is, when we have identified these companies, are these companies able to meet the criteria that you had mentioned earlier?
That's correct.
All right. So these companies that you mentioned here, these consumer products that we normally use and so on and so forth, do they meet the 10-10-10 criteria that you just mentioned?
Yeah, actually, these were stocks that actually met the screening criteria. You remember the 139 companies that I mentioned earlier?
Yes.
Yeah, these were actually numbers of stocks that I actually crunched from that list. And I had to make sure they were Sharia compliant. So, so the first filter was the three criteria I mentioned: 10 years profitability, 10 years paying dividend, and 10 years of positive operating cash flow. Plus, they were Sharia compliant. So actually 4 criteria, only then they can make it to this list. But quite ironic, coincidentally, these were products that, you know, it's so venerable. You know, you use them every day, and it suits every Malaysian's lifestyle. So that's the reason why we put this in. Yeah.
Right. So now, based on these stocks that you have mentioned, these are stocks that met the criteria. Do you want to? I think you have the performances of these particular counters, right?
I'm very keen to show the performance of these stocks.
All right. So these are the criteria that we have. John has just mentioned, right? 10 years of continuous net profits, 10 years of continuous dividend paying, and also 10 years of continuous positive operating cash flows.
That's correct.
So
that is correct.
By the way, you can actually download this presentation slides later after the webinar. You can actually download it from the handout screen that you see on your webinar page.
Yep.
Right? Now, so I think this is where you mentioned how you actually get the
so
news, right?
actually, we have a filter that actually runs this 3 criteria.
Because if I were to find these 3 criteria out of 900 companies, it's going to take a lot of time.
Oh, definitely. I mean,
I can't even find the data.
So let's just say, let's do some simple math. So 3 criteria, right? And 10 years. So that means you already have 30 data points, you know. And 30 data points, as I mentioned, the results of these 30 data points was actually 139 companies. So 139 companies multiplied by 30 data points. Can you imagine if you were to mine or to harvest this data on your own? That means one annual report, you have to pick up 3 points. Do that by 10 years and do that by 139 companies. So it's always, you know, a lot of times, because some of you know I'm actually an engineer by training. We always like to base our opinions or our judgment call based on data. And you can't avoid, you know, not seeing through data, but the question is how conveniently and how fast you can actually do that. And the filter that we're going to show, probably not the filter today, but how we comb through these 139 companies was just done within 3 clicks.
Right.
Yeah.
So with the Acris Tracker software, you can actually have these, you know, the list of counters based on the criteria that you put in.
That's right.
With just a matter of clicks, right? Instead of going through tons and tons of financial reports.
Yeah. I don't think anyone will enjoy it.
Right. Okay, so let's take a look at you know, these are some of the stocks that if you do a filter, you know, if you look at 10 years of continuous profits, you have 300 stocks that met the criteria. But if you want 10 years of continuous profits plus dividend paying, then you have 229.
That's right.
And if you go down with the third filter, which is continuous positive operating cash flow, then it brings down to about 141 counters. Right? So these are basically, when you go through these three criteria, you have been filtered down 3 times. These are basically quite good companies to invest in.
That's right. Right? That's right. Can you just give me a few seconds? Apparently, you're not getting very clear audio from me. I'm just going to change the battery on the mic. Just 5 seconds.
So Puan Nani, do you look at investment this way? I mean, looking at whatever that's around you and start finding what companies provide these products or services and start investing these companies. Or before this, we were just basically listening for advices or from your friends or your family, from the investment advisors. So do you have this way of trying to figure out which companies to invest in? I mean, as a lifestyle itself, have you ever thought of that?
Previously, is it based on advice before I
Based on
joined
advice,
Bursa? Okay. As I, because I'm from finance background, but of course I know about investment, about finance. I learned to know about how to invest. Okay, so the basic of investing. So it's the fundamental. So you need to go back to the companies that you are investing in. So those companies which have the profit, which give profits and also pay dividend. And it goes back to what John says just now, is about the three criteria that he mentioned:
Right.
profit, dividend, and also the looking for cash cow company.
Yeah,
Of course.
that's right. That's right.
Correct. So based on this criteria, I think you have this portfolio here. Maybe John, you want to explain to us?
Yeah.
here,
So
right?
just now, as the 10 counters that we've just showcased, I'll just probably just explain how the table actually works. You read the table from the left to the right. So we started off looking at these companies in 2008, which was 10 years ago, and the numbers that you can see were the price at the year end of 2008. Now, so if you have bought, for example, Dutch Lady, it would have cost you 9 ringgit 10 cent, right? 9 ringgit 10 cent, and if you have bought 100 shares, it would have cost you just 910 ringgit,
10 ringgit.
just slightly below 1,000 ringgit. Now, in 2017 year end, that 910 ringgit has turned into 6,300. So you would have gained roughly about 600%,
Yes.
just by doing nothing. Just ensuring that people continuously drink boxed milk. And I'm not even I'm not even included the dividends, which we'll touch slightly later. I think that's still not that interesting. If I can draw your attention to the middle company called Padini. If you bought Padini in 2008 for 47 cents, today or end of 2017, it would have been about 5 ringgit. You have made 982%, 10 times your money. Now, this is real-time data, and a lot of times people have a lot of misconception about the Malaysian market, about Shariah-compliant stocks. Data has clearly trumped it all. I mean, on average, even if you made some mistakes and you bought probably this company called NTPM, you would at least have gained 100% of your money. So on average, if I took the whole average, let's say you equally divided these 10 stocks, on average, you would have made 467%, which is roughly 5 times your money. That's not even including dividend. So if you ask me, the data itself, I leave the data to speak for itself.
Right. So that's the thing, isn't it? I think in a lot of investors, they are trying to find very, like you said, sexy companies.
That's right.
We are looking at technology stocks or even companies that has got to do with commodities and so on and so forth. But really, it goes back to the very basics, right, of companies. And these are companies that really perform well in any market conditions.
That's right.
If you invest in, for example, like tech stocks, they can go up very fast, but they can also go down very fast.
That's right.
It's very volatile.
Yeah.
But these are the companies that are basically, I think, do you think that they are low risk in nature?
Oh, very. I mean, if you think of it, I think the best example I would give was Ovaltine. If those of you who lived through those days of Ovaltine, they tried to compete with Nestle, Milo. Where are they today? So it all goes to show the competitive advantage of Nestle, the strength and the quality of the management to manage this competition. It also goes to show that while I believe there's enough space, market space for both Ovaltine and Milo to exist, but something Nestle must have done right to keep Milo there until today. So you talk about risk. I don't see any Padini stores closing anytime soon. I don't see people drinking less and less Milo. I mean, the joke that my wife has with me is that every time I see a Nestle promoter in the supermarket, I start befriending them and I ask them, how fast does your Milo goes off the shelf? So that's my market research. We have this advantage because we are consumers ourselves. And if you see that a product that you want to buy and suddenly it doesn't appear in the supermarket, that's already a first hint. That's your market research. You don't need to really understand or to listen to analysts to tell you, hey, product is booming, but when you go to the supermarket, you don't even see the product there. It's contradictory. So trust in your own gut, trust in your own research, very simple research, and let time be your ally, let time be your friend.
I think like what Warren Buffett said, right? You invest in a company that you really understand.
That's right.
And I guess these are companies that you can really easily understand. What products that they're selling, what do they do? It's nothing complicated, right?
How complicated can Milo be, right?
All right. So John, based on these stocks that you have mentioned here, these are Sharia compliant.
That's right.
They meet the criteria that you have mentioned. Of course, there are many more, but this is one that you are familiar with.
Yeah.
Now, based on this list of stocks, now as a new beginner, as an investor, a new investor, how do I start with? Which stock do I start to buy first, and how do I allocate these stocks in the portfolio?
That's right. That's actually a very, very pertinent question. Now, most of the time, a lot of people think that you need a lot of money to start.
Yeah.
I mean, Nani, I think you being in the market for so long, people keep on telling you, it's expensive,
No, it's not.
Yeah,
It's
exactly.
always like I get money first, then only I invest.
Correct. I mean, in the days where you had to buy one lot of shares of 1,000 shares, that I would have to agree. But even an expensive stock like Dutch Lady at 9 ringgit 10 cent, if you were to buy just the minimum 100 shares, it would have only cost you 910 ringgit. Now, if you were to table your family expenses for a month, right, 910 ringgit would just probably be the meals that you take for 1 month.
Exactly.
Right?
Yeah, you're right.
Yeah, you go for a dinner today, even if you makan ayam penyet, ayam penyet is probably easily close to 10 ringgit.
10 ringgit, yes.
Right? So you think of it this way. Let's just say, let's give some tangible examples, Benny. Let's just say you want to start a portfolio today. And I'll start with 10,000 ringgit. I mean, it's a round figure that's easy to calculate. And I need to really, really emphasize this. When you start investing in stocks, try not to just buy only one stock. Yeah. Because that is really putting all your eggs in one basket. And I come back to the example of 10,000 ringgit. Let's just say you have this amount of 10,000 ringgit to start, right? I first determine that this is the amount that I'm happy to soak away for the next 5 years. Will 10,000 ringgit be a lot to invest? You kind of think of it, if you want to buy your first house, and if you want to put a 10% down payment, right? 100,000 ringgit house, I don't know whether we can still find 100,000 ringgit house. Probably the cheapest is probably 200,000 to 300,000, right? So you're talking about 30% down payment, 30,000 down payment, right? So 10,000 ringgit, happy to soak away for 5 years. Yeah. You should allocate it to easily between 3 to 5 stocks, nothing more. Yeah. Why do I say that? Because by allocating to about 5 stocks, that means you have about 2,000 ringgit per stock. That is something of a sizable amount, right? But at the same time, even if you lose that 2,000 ringgit, it's not, it's a basket of stocks, then it's not too painful, it's 20%. Sometimes you see guys that have a portfolio of, let's say, 50,000 ringgit, but they have close to 50 stocks. I seriously don't know how you allocate.
How you manage the stocks.
So the strategy will always be, try to allocate roughly between 20 to 30% of your basket of your portfolio into one stock, nothing more. And always start with that initial amount. So it can be 10,000 that I'm giving an example, maybe 50,000 for you, it may be 100,000 for you, but use that rule based on percentage. That would be how you start.
Right.
Yeah.
But I guess it's also good to start now, isn't it? Because these share prices, they keep on rising.
Exactly.
And when you want to invest, let's say in Dutch Lady, right? In 2008, it's only 9 ringgit and 10 cents.
Yeah.
You buy, let's say, one lot, it only costs you 910 ringgits. But if you're going to buy, let's say, in 2013, and the data there, it's already 47.
That's right.
So you need 4,700 ringgit
Correct.
to buy Dutch Lady.
Correct.
And now it's about 60
63
ringgit, so it becomes 6,000. So maybe in 5 years or 10 years time, it can go to 100 ringgit, right?
Actually,
and
Benny,
need
since
more
you
money.
mentioned about Dutch Lady, I have 2 kids, and my daughter's 9. She started drinking Dutch Lady milk obviously 9 years ago, and yeah, it was about 10 ringgit. And my wife told me, "Why don't you buy Dutch Lady?" And I said, "Okay, wait till I have money, right?" Then my son came and he started drinking Dutch Lady, and it was probably about 50 ringgit. Today it's 63 or even more. So just echoing what Benny said, let time be your friend. Don't think too much, don't procrastinate, and let these companies actually work for you. That's the title. You want money to work harder for you, and by buying into stocks, you get companies to actually contribute to your wealth.
Right.
Yeah, and don't procrastinate.
I think the mindset is a little bit different over here because a lot of when we had Encik Nazari Rosli earlier,
Oh, yeah.
When investors start to come to the stock market, they always talk about playing stocks, or
Yeah.
buying saham.
Yeah.
But I think that mindset has to change, right?
Mindset,
Because
yes.
like John has just mentioned, when you are investing in stocks, you're actually investing in the business.
That's right.
Exactly.
So if you have 3 or 4 businesses, you actually have 3 or 4 businesses that is running for you
Correct.
as a
Correct.
shareholder.
Correct.
And that's a very good point. But if you, like you say, if you have consumed a lot for that particular product, why not you buy the company shares?
Correct.
So that when you consume, you're paying it back yourself.
That's right. That's
Right.
right. That's right.
So now I'm going to go to the next poll because based on the number of companies that we see here today, I just want to basically ask the audience over here whether you have owned any of these stocks. Can we have the next poll on? Yeah. Okay. We only have 5 stocks here, so you just can click any one that you have actually invested before or currently investing in. Participation. Now let's go on to the next session. But before that, what about those who really do not have a lot of money, where they can only save maybe about 100 or 200 ringgit a month? Question is, should they put that 100 or 200 ringgit into their savings, or should they use it as an investment?
Yeah.
Yeah, possibly people who just started or about to start or really want to start but don't know how, or possibly will say that I don't have money to start investing in the stock market.
Yeah.
Let's say you have 100 per month.
Yeah.
So possibly the 50 ringgit you want to put aside for emergency.
That's right.
So there's another 50 ringgit that is idle.
Yeah.
So if you accumulate about a year, so you have 1,200.
Yep.
And you put aside the 50 ringgit for a year, you get about 600.
That's right.
So you can buy one stock already.
Yeah.
NTPM?
NTPM, it's today it's roughly about 60 cents.
60 cents.
Yeah. So
you can buy
600.
one
You
stock already.
yeah,
So you
exactly.
can become an investor on the
Yeah.
stock market.
Yeah, exactly.
Yeah.
And these are good companies, right? They have,
That's right.
Exactly.
That's right.
I guess the important thing is how can investors find these
These gems.
gems? Yeah, if you don't have the data,
That's right.
it's a little bit more difficult.
That's
I
right.
think that's where we can actually share.
Yeah.
And if you want to find out more later, John will share with you how you can get more of this information later on.
That's right.
All right. So now, John, do you still have any? Do you want to give any more advice on how?
Oh, yeah.
You want to give a portfolio? How to build a portfolio?
Yeah, just something that I want you to notice. I mean, you see that I spent a lot of focus on this because we crunched a lot of data to come up with this conclusion. I just want to take your attention to probably the easiest would be still the top of the line, the top row, which is this company called Dutch Lady. Now, if you had invested 100 shares in Dutch Lady in 2008, it would cost you 910 ringgit, right? So you actually putting that 910 ringgit at risk. Am I correct? Because you never know. I mean, in hindsight, hindsight is always perfect, but let's just say at that point you were afraid you will lose this 910 ringgit. So over the years, Dutch Lady has paid dividends, and accumulatively, the dividends over the past 10 years is on the second right column. Can you see this total divs? It says 10 ringgit and 16 cents. Now I want you to do some simple math for me. If you have invested 100 shares, 910 ringgit, but the dividends you get for that 100 shares is 10 ringgit 16 cents over these 10 years, what is your capital at risk? You put 910 out, but you actually gotten back 1,016 ringgit. So what is your capital at risk at that point of time? It's zero, right? It's zero.
You got back your capital, right?
Exactly.
Just
by the dividends itself. So your 100 shares of Dutch Lady in 2017, what's the cost of it? It's free. It's literally free.
So whatever the price it is now, it's all the profits.
Exactly. So if you go down the list now, you see the qualities of great companies, because they make consistent profits, because they consistently have cash flow. That's why they are generous enough to pay dividends. And if you look through the list, you can see that almost all the companies' accumulative dividends have either matched your initial investment or exceeded. And this is one of the strategies we use to lower what we call your capital at risk, you see. I mean, literally, if you look at Litruck, right at the bottom, 184, cumulatively dividends is 295. It's almost 2 times the capital that you put out, you see. And if you look through the list, I mean, I can't see one that has, okay, Nestle is not matched, but it's close, it's almost 90% of your capital, you see. And a lot of times people who actually trade in a market, they don't get to enjoy these dividends because this is a long-term strategy. You get dividends, probably depending on companies, once or twice they paid out in a year. But if you go in and out of the market, the brokers will be very happy. But then to yourself, this is long-term wealth creation at its best.
Right.
Yeah.
And the returns that you see on you put on the right hand side, those are absolute return.
Yeah, with
itself, right?
capital gain only, not including dividends at all.
So you haven't even compounded, right?
Yeah.
Compounded every year.
Yes.
Much more.
Yeah, we've got some we have got some back tested data to show that if you compound it, you probably have made double of this, double of this amount, some more. Yeah.
So I think don't underestimate the power of small things, right?
Yeah, your
Just
10 cents dividend or 20 cents dividends. Yeah.
If you start off small, you may not see it at first. You're thinking, if I only have 1,000 ringgit to invest or 2,000 ringgit to invest, and how I'm going to see this grow?
Yeah.
But you'll be surprised, after 10 or 20 years, you see how this has actually grown.
The Malay have this saying, sikit-sikit lama-lama jadi bukit. Yeah.
Yes. So right now we're going to go to the next session. So we already mentioned to you how you can actually find stocks easily to put into your portfolio. So these are the companies that are very well run.
That's right.
Give good dividends. They take care of the shareholders, right?
That's right.
And they also take care of the company very well.
That's right. That's right.
So now, how do we find companies that are Sharia compliant? So one of the easiest way, of course, is if you go to Bursa Marketplace. Let me see if I can get the slides up. Why my slides are not changing? Okay. If you go to Bursa Marketplace, once you go to this Bursa Marketplace, you click on that two thing over there.
Yeah.
That says screener.
The arrow, right, Benny? The right.
The arrow. So the first click there, and the second click, you click on the screener, you get a list of stocks, and here it will show you all the counters that are available.
That's right.
So you see the circle, the green circle over here. There are 939 counters of companies in Bursa Malaysia.
Yeah.
But these are not Sharia compliant yet.
Yeah, these are the total basket, right?
Total, all the stocks, right?
That's right.
So if you want to have Sharia compliant stocks, then you just click on that button over there, number 3.
Top right, on the top right.
Yeah. So once you click that button, then you'll see here that you only have 693 stocks here.
That's right.
And once you click the results, then you have the whole list of Sharia compliancy.
Yeah.
And I think the other way is to also open a Sharia investment trading account. And maybe Nani, you want to explain that a bit further?
Sharia trading account.
Yeah, so you avoid,
Okay, the Sharia trading account. Before I go into Sharia trading account, Bursa Malaysia has launched Bursa Malaysia I, which is the world's first end-to-end Sharia investing platform. It was launched 2 years back.
Yep.
We just celebrated our 2nd anniversary.
Oh yeah,
recently.
5th of September, yeah.
Yes. And it's a platform that incorporates the full range of exchange-related services from listing, trading, clearing, settlement until depository.
I see.
And this platform is not only to encourage people to invest in a Sharia-compliant investment instruments, not only, but also in a Sharia-compliant manner.
I see.
What I meant by this is actually, for you to invest in a Sharia-compliant manner, you have to go to the Islamic brokers.
Yep.
At the moment, we have about 14 Islamic brokers out of 30. But when you invest with them, you have to open CDS account and also Sharia trading account.
Sharia trading, okay.
Sharia trading account. So once you open Sharia trading account, you can only invest in Sharia compliant product.
I see.
And all your trade and post-trade activities will be Sharia compliant.
I see.
So that is why it's called end-to-end.
I see.
From the moment you open an account, Sharia trading account, until settlement, until you get back all your money, it will be Sharia compliant.
I see.
Okay.
So what are the benefits of opening a Sharia trading account?
Opening Sharia trading account. Okay, as you know, the principles of Sharia investing do not prevent people. The principles of Sharia investing do not prevent people from getting profits. It's the same.
Yep.
Okay. At the end of the day, we want people to those investors to actually invest and get the profit out of your initial investment.
I see.
It's the same. It's just like to grow your wealth.
Yep.
But in a Sharia compliant manner.
I see.
That's the difference.
I see.
So I understand that if I open a Sharia trading account, if I want to invest, let's say I accidentally click an order to buy a non-Sharia compliant stock, that order will not go through, isn't it?
Yes.
In fact, I can't even click.
Yeah.
So that actually helped them to save time to determine whether that stock is Sharia compliant.
So those are the circuit breakers they have in place.
Yeah.
Okay.
That one is already prefixed at the broker level.
I see.
So to open a Sharia trading account, you actually have to look at the participating brokers who have the Sharia account. And I think you can find those details at the
Bursa Marketplace. We do have information on Bursa Marketplace.
Okay.
www.bursamarketplace.com.
Yeah.
Or you can go to Bursa Malaysia website.
I see.
bursamalaysia.com.
Yeah.
And the list of Sharia compliant stocks, you can have or you can see the list from what Benny showed just now.
Yep.
From Bursa Marketplace. Once you open the toggle, change the toggle to Sharia mode, or you can see all the Sharia.
I see.
You have more than 600, almost 700.
Yep.
So how do I get more information about Sharia investment?
Do you have any brochures or?
You can see we have the brochures about what is Sharia compliant or Sharia investing, what is Bursa Malaysia I, about the products, I stocks, I ETFs, I REITs, and we also have these best practices for Sharia investing. So,
I see.
It tells you how to actually invest in a Sharia compliant manner. So we have these best practices. We have in English and also in Bahasa Melayu. So you can get it at the hard copy
I see.
at Bursa Malaysia, or you can download from our bursamarketplace.com
I see.
or Bursa Malaysia website. Yeah? And the recent one, we actually just introduced this investor guide.
Oh.
Everything is here. It's
Cool.
very
Place
exciting.
cards, huh?
It's a play card.
Yeah.
And then we have what is Bursa Malaysia I.
Child friendly, yeah.
Yeah. Okay. This is part of the education.
I see.
For everyone. Okay. And what is Bursa Malaysia I? The Sharia compliant investment, the screening, and also what are the stocks or what are the products available on the exchange, and also how actually you want to start with the Bursa Malaysia
I see.
So everything is actually available, hard copy and also a soft copy on our website.
All right, cool.
All right, thank you so much, Nani. Thank you so much, John.
Yep.
We have actually come to the end of the webinar, but it's not end yet until we have gone through your Q&A.
That's right.
So if you still have any questions, please continue to post it on or just type it on your chat box over there so that we can receive your questions. So let's move on to the next session, which is the Q&A.
Great.
But before that, do you have any last final advice that you want to give to the audience on portfolio and also picking the right stocks?
Yeah, I think think of it when you invest. Actually, investing is the cheapest way to start a business, and the risk and the honest is so much lower than starting your own business. And if you have that mindset and make time as your ally, I think over the long run you will you will definitely grow your wealth through the stocks investment with that kind of mindset. Yeah.
So for Nani, you know that the Muslims' participation in the stock market is actually quite low as compared to the other races.
Yeah.
Then now that you've actually provide a
An
platform,
avenue,
that,
yeah.
for them to actually invest without any doubts, right? So what would your advice be for the Muslim community?
Yeah, at the moment, based on the retail participation, retail means you and me.
Yeah, that's right.
everybody like us. Bumi Putra participation is about 26%.
Okay.
Okay, it's actually
Increased quite a lot.
Yeah.
but yeah, for the past 2 years,
Mm-hmm.
we can show actually that there's an quite significant increase in
Great.
terms of Bumi participation.
That's great.
And I love to see that.
Yeah.
So with Bursa Malaysia I hope more will come to the stock market.
That's right.
Because previously people will always say that Bursa Malaysia or the stock market, is it halal or haram?
That's right.
So when we have this is fully Sharia compliant.
That's right.
So it's not haram. Okay, you can start investing on the stock market now.
That's right.
But first of all, you need to learn and educate yourself.
That's right. That's a very important point. Yes. Yeah.
Okay, great. Now let's move on to the questions, right? Okay, some of the questions has already been answered. For example, like how do we know whether a stock is Sharia compliant? Now, how will Sharia compliance market timing? I'm not sure the question. I think basically the question is supposed to be how to use market timing for investing in Sharia compliant. And John, you want to? If not,
I
just
think,
go for it.
yeah, why don't you go for it then?
Well, again, market timing is simply you want to invest in the right time, because I think a lot of investors want to know whether it's the right time to invest. When is the best time? Should I get in now? Should I get in when the market is very bullish?
That's right.
Very bearish? Whether the market is in a recession or not? But I think to get into market timing where you can actually time the market itself, that skill is really hard to actually.
That's right.
And in fact, you will not be able to time the market all the time.
Yeah.
But I think the best way is to start small and to start developing a portfolio, because if, like John mentioned, if you have a portfolio, it doesn't matter, whether the market goes up or goes down, because if the company is good, the share prices should be going up.
That's right. That's right.
And I think the first thing that we should do is actually to start now itself.
That's right.
I really mentioned to you that the longer we delay, the prices are just going to go higher, because Malaysia is not a developed nation yet.
Yep.
They are still growing, and
That's
therefore
right.
there's still a lot of growth.
Yeah.
Right. People may think Nestle is 140 ringgit right now. It's so expensive. But who knows, 10 years later, it may go to like 600-700 ringgit.
Correct.
Yeah, so I think don't do market timing that much, because for a start, I think you should concentrate on finding good companies to invest.
That's right.
Probably he's asking for certain sectors actually.
Right.
Actually all the time, which is good.
Yeah.
Like FMCG maybe.
Yeah, FMCG. It's I think Ponani brought up a very good point. I think probably I think he probably wants to understand that if there's cyclical companies like oil palm companies, companies that get very affected because of commodity prices. But I think we always have this phrase: you learn to walk before you start to run.
Yeah.
And for those, I mean, as Benny rightly mentioned, right, why don't we start with those steps first?
Right.
Before you try to master something that is,
But you know, I actually have good news for those who are really want to look at market timing.
Oh
and
yeah,
market
that's right.
cycle,
Your workshop's
because
coming up, right?
tomorrow we have another webinar.
Yeah,
And
yeah,
this is also organized by Bursa Malaysia.
yeah.
We're going to have Mr. Derek Tan, he's an expert in market cycles.
That's
So
right.
if you really want to know about market timing,
Yeah.
market cycles, which sector to look at, which not to look at, please do attend our workshop, webinar tomorrow night at
That's
8
right.
p.m.
That's
We'll
right.
give you the details later on.
Yeah.
All right. Now let's go on to the next one. Now, what are some of your favorite methods to find investment ideas? Okay.
Data. I think as I've guided, as I mentioned in the lifestyle questions that I've asked Pandani just now, I think start with the most basics. I mean, in some of the previous webinars that I've been on, I've actually recommended this book called One Up on Wall Street by Peter Lynch. Now, he advocates that the best manager for his or her own fund is himself or herself. And if you've gone through the book, it quite clearly states how he gets all his ideas is actually people around him, products around him. And you read some analyst report that is so far-fetched that you think you understand it, but you actually don't. So why go for something that it's difficult to comprehend? Because when you try something that's difficult to comprehend, the risk is higher. As long as it's simple, it's easy. He actually had this company. Actually had this what do you call it, mantra. He said, the more the company is not known or not famous or have a very dull name, he loved it. No, seriously, he said because the joke they had was that if they didn't try companies that have a very sexy title or very profound name, right? They spend so much time on the branding, they didn't spend time on developing the business. So he said, if the company name is so dull, then most likely they will spend time, trying to make sure the business is right, lah. So that would be one idea that I can advocate for people. Don't worry about. I mean, let's put it very frankly, lah. You're not gonna find a Google or you're not gonna find an Amazon in Malaysia, right? And as a growing and developing nation, it's always baked to consumer staples, something very simple, something something convenient and something. Notice, be very observant of the consumer trends. I mean, where was e-commerce 5-10 years ago? And when the prevalence of e-commerce happened, what happened to logistics company? GDEX, CenturyLink, CityLink, all these companies were developed or grew to where they are today. It's because of the prevalence of change in consumer behavior. Yeah, so something just around you, those are the best ideas that I can give you.
So I guess sometimes the opportunity is right in front of you.
Right in front of you.
Unless if you can actually see it and take action. I think the thing is, I think a lot of people know what's happening and all that, but they do not know how to take action.
That's right.
It's the most important thing is to start taking action, isn't
Yeah,
it?
that's right.
We've already
That's right.
given you some of the tips on how to look at data itself and see whether the company is good and so on and so forth. And if you apply this, I'm sure you're able to invest successfully, right?
Correct.
Ponani, you want to add anything?
Okay.
Do you have any favorite methods to find stocks to invest?
I cannot give you any clues, right?
Yeah.
Okay, so let's go on to the next question. I think this is quite an interesting question. Here it asks, why are conventional stocks considered bad? Why? In Sharia law, I think that's the impression that they get. That the stocks that are not Sharia compliant are considered bad. Okay, maybe you want to highlight that a little bit.
I don't think it's called bad. Okay? But it's just like being Sharia compliant, that means the nature of business or the business that they carry out, it's actually aligned with social objectives. Okay, which means the nature of business that avoid certain criteria that I mentioned before. For example, gambling. So it involves speculation. Yeah, so you don't know the price will go up or down. And for example, tobacco, so it brings more bad
social ills.
Social ills. Yeah, and for example, another one, if we can say, if it involves in entertainment.
Yep.
Yeah. So certain kind of entertainment that is contrary to Sharia, that means possibly that brings another social ill, for example. Yeah. So that kind of social objectives that must be aligned.
I
yeah?
see.
Okay.
It's for the greater good of humanity.
Yes, correct.
And I think that it boils down to the faith.
Yeah.
Yeah, and yeah.
Yeah, so I guess you should not consider it as bad,
Yeah.
but it's
Consider
just
as
that it's
bad.
being
Yeah.
compliant to the
Exactly.
Sharia laws
You
itself.
can't say that, like, say for example, most finance companies under finance sector.
That's right.
So most are the banks.
Yeah.
So you cannot say that they are bad companies.
Correct.
Okay.
Correct.
So it's just that the Sharia compliant is the activities behind it, how you comply with the Sharia principles.
That's right.
Is for the benefit of the community or
That's
the
right.
people. Yeah.
Correct.
Right.
Yeah. Actually, I can give it a very good example of a good company.
Yes.
But it's just because of certain ways they raise money, capital. Okay, Asia and Asia X,
Yeah.
very related, right? I mean,
Yes.
belong to the same group. But Asia X is Sharia compliant and Asia is not. Just for a very simple reason, Asia X actually raised sukuk
Yeah.
to actually buy planes, whereas Asia just raised conventional bonds.
Conventional bonds.
So that's the only difference. So
Yeah.
don't throw them into baskets. You know, non-Sharia is bad and then Sharia is.
Exactly.
It's just certain criteria that, as you've
It's the
clearly
same
mentioned.
business.
That's right.
Asia Ads and Asia.
Yeah.
It's just that how they manage their financial.
That's
one is
right.
actually financing through debt,
Yes.
through bond. Another one through sukuk.
That's right.
Right.
That's right.
And why it goes back to the interest, for example.
That's right.
So interest, possibly one will gain
Yeah.
and the other will lose.
That's
So
right.
that's why it's actually for the benefit of the people.
Yeah.
Yeah.
Okay, so next question is why are stocks like Nestle and Dutch Lady so expensive?
expensive.
I think it's going to get more expensive
Yeah.
if you keep on waiting.
Actually, it's a pretty interesting angle in which is asked. When I was a student of, I'm from Equities Tracker, and I was an engineer when I joined them as a student about 7 years ago. And what happened was the founder of this company actually came to class. He only normally gives the opening remark, and he just said that Nestle is 100 ringgit share. It's not a matter of how or what. It's a matter of when. So naively, I just believed in him, and I bought for my parents, the teachers, and when we actually went through understanding how they ran the businesses, when we actually understood how do you know that they pay out 100% of whatever they make in profits to you in dividends? So let's just say they made 600 million in profit, right? They pay 600 million to you as a shareholder in dividends. You go and find companies in anywhere in the world that actually pays you 100% of the profit to you in dividends. Now, when you have stocks like this, what naturally happens is the law of supply and demand. Good companies, a lot of people realize the value, the intrinsic value of these companies. They start investing, and the law of supply demand just dictates that the prices go up and up. I mean, today, if you looked at companies in the US, Amazon today when they split, Google when they split, it was $500. Today it's coming close to $1,000+ and it just keeps going up because these are quality companies, venerable. They grow the business very well, and the law of supply and demand just takes place. It's like house in Bangsa. You're asking the same question as if why is the house in Bangsa today 2 million when it used to sell for 200 million, 200,000. You see, yeah, 200,000. So it's the same rule. Great stuff, good value, great value. People just go for it.
Yeah. So when there's a demand is strong for that particular product or even stocks, the price will keep on it.
Yeah, it drives the prices. Yes.
Yeah. So this is also related a little bit on the question earlier. Here the question is, do you agree that consumer stocks usually perform better?
I would agree I say it depends. You see, consumer staples or consumer products are something that
People will use it.
yeah, people uses it every day.
Whether the market is up or down.
That's right. The struggle with that is that if you look at consumer products and the margins that they make are fairly stable. but you're not going to expect fantastic margins for these kind of companies. They do make money. They do grow over the long run, but you're not expecting astoundingly high margins for this kind of company. So it comes from different angles. When you say if you want to provide the best returns over the long run, it will provide great returns. But if you were to benchmark it against a company that has higher demand as consumer products, consumer behaviors change, things like software services or things like that, then it's not an apple to apple comparison. But over the long run, consumer staples have never failed. Put it this way, it's never failed.
Yeah, and I think one of the important characteristics for consumer products, although you may see the growth, but it's also consistent.
That's right. That's the word that you hit it precisely. Yeah, consistency.
Okay, so I think this question is posed to Puan Nani.
Yeah.
Is short selling Sharia compliant then?
No, it's not.
So it's clearly not, right?
It's clearly not.
Okay.
Yeah.
Now here you ask the difference between opening a Sharia trading account and a conventional trading account. So what are the main differences?
Okay, if you open, currently we have 14 Islamic brokers. Out of 14, we have one Islamic broker which runs full-fledged Islamic stockbroking services.
Okay.
What it means by full-fledged Islamic stockbroking services, that broker only provide Sharia compliant trading account, and you can only invest in Sharia compliant stocks.
I see.
Okay, and we have another 13 Islamic broker with Islamic window. Broker with Islamic window, another 13, which means they run both conventional and also Islamic.
Yep.
Okay. For those who open a conventional trading account, NCDS account, so you can invest in both conventional stocks and also Sharia stocks.
That's right.
Okay, but when you open conventional trading account, even though you invest in the Sharia compliant products, your trade will go through the conventional trade and post-trade activities.
I see.
It will not be on Bursa Malaysia I.
see.
Okay, if you open your Sharia trading account with this 14 Islamic broker, then only your trades will be on Bursa Malaysia I. It will be end-to-end Sharia.
I see.
So from the trading itself up to the settlement is all Sharia compliant. So if you
from your opening, from your buy and sell, trade and post-trade activities will be Sharia compliant, end-to-end. Yeah.
Okay.
Okay. It doesn't mean that if you open conventional trading account, you cannot invest in Sharia stocks.
That's right. Yeah.
Because Sharia trading account only available at Islamic broker. This is only to cater for the end-to-end, for those who really want that full-fledged
including
Islamic,
settlement and everything.
Including settlement and everything.
That's right.
Okay, here we have another question here. What are some things or maybe some factors that someone should avoid when investing in the stock market?
Oh,
so we talk about how to find stocks, but now what to avoid?
What to avoid?
Tips from unknown people.
Tips from unknown people. That's a very good. There's a joke. I run an investment academy where we teach people how to invest in the market, right? And there was a joke shared to me by one of my students. I think it was pretty profound. He said, if the vegetable seller and your taxi driver starts talking about the stock, it's time to sell. So it encompasses this message. It says that never rely on tips. Please do your own, what we call due diligence, meaning fact check. Don't read a business report on the paper and start buying your stocks. Don't and never fall into this emotional trap. It's not easy to do. I just learned this phrase also. It's called FOMO. I think the younger generation will definitely heard of it. It's called fear of missing out. So when you see a share price and it moves from 20 cents to 50 cents to 80 cents, right? There's always this fear that you didn't catch it. Oh, I missed this one. I should get in now, because if I get it in 80 cents, then it'll probably go up to 120. So don't fall into that fear of missing out, because there's a lot of other fish in the sea. As I mentioned, there's 139 great companies, and if even if you have R1 million or a 5 million ringgit portfolio, do you think you can buy 139 stocks altogether? I doubt it. Seriously. So don't fall into this fear of having missing out. Always do your due diligence. Always educate yourself, like what Nani says. I learned my lesson. When I first came into the market without any knowledge, I lost 25,000. It was as simple as that. And a lot of people cringe and whine about, trying to pay for an investment class to teach you, right? Trust me, the money that you pay and educate yourself is priceless compared to the tuition fees that you're going to pay in the market.
Yeah, I've heard a lot of investors always say that, I should have done this earlier.
Yeah, I should have done this
I should have gone
earlier.
through the courses earlier,
Yeah.
or educate myself earlier.
Yeah.
Then they could probably be better right now.
Oh, definitely.
But I think, you can start anytime.
You can start anytime. I mean, look for a good education course, someone with a proven track record, and make sure that at least, even if you feel like you want to do it yourself, find good books. Read up about the investment, because these books, the venerable ones, people like Warren Buffett, people like Peter Lynch, people like Seth Klarman, what they've written for was probably 30, 40 years ago, and those are still time-tested principles that still hold true today. I mean, the father of value investing, Benjamin Graham, when he taught this class in the 1930s in Columbia University, the book Securities Analysis, Intelligent Investor, until today, the billionaires that are value investors still hold true to all these principles.
Right.
It's more than 70, it's almost 100 years old, and time-tested principle. It's like the laws of physics. How can you change that? Yeah. So coming back to the question, just educate yourself. Don't worry about fear of missing out, and do your fact check. Always do your fact check.
Right.
Yeah.
Right. So I think you've also answered the next question.
Oh, what was the next
which is
question?
what books should you read?
Oh,
Other
okay.
than Warren Buffett?
That's actually not too far from. The sad thing about it is that there's so many published books on US investors, but there are so few on Malaysian investors that I'd like to highlight today. Yeah, and one of it is this. He's actually an academician in USM. His name is Dr. Neo Soon Kian. For those of you who've been on the scene long enough, you would have probably heard of his book. You can't even find. I only know in the Bursa library there's only one copy of that book, and it's very difficult to. It's out of print. True Blue Value Investor, I think one of the earliest value investors besides the founder of Equities Tracker, Jim, in Malaysia. The other one would be the guy who